Good morning, friends. Important video on 56th GST Council meeting held on 3rd September 2025. Honorable Prime Minister has announced on Independence Day there would be next generation of GST reform since GST got introduced from July 2017. He talked about three pillars, and which is structural reform, rate rationalization, and ease of living from GST perspective. It is all towards Atmanirbhar Bharat to boost domestic demand, domestic consumption, and thereby adding to our GDP. Interestingly, under structural reform, the important steps which are being taken to reduce the inverted duty structure incidence for a specific sector like textile, chemical, fertilizer, pharma. Alongside, there is a recommendation from GST Council to reduce the classification dispute pertaining to different GST rate applicable and to provide stability and predictability. What would be the GST rate? A lot of initiatives are being taken under structural reform. Rate rationalization, interesting and important. Presently, we are having nil rate, 3% rate specific to gold and jewelry, 5%, 12%, 18%, 28% plus compensation cess. Now, there will be two-tier GST slab, which is being recommended by GST Council on the premise of whatever stated by Honorable Prime Minister on Independence Day. There will be only two slabs, 5% and 18%. So what happened? 12% GST slab is going away, and most of the item under 12% slab is moving to 5% GST rate, even at nil rate. And whatever falling under 28% slab is now moving to 18% GST slab. So there would be 5% and 18%. What all items are now moving from 12% to 5% or 28% to 18%, we will discuss with the detailed press release. Having said that, the third one, ease of living from GST perspective. There would be seamless technology-driven GST registration within 3 working days to small taxpayer whose tax liability for a particular tax period is less than 2.5 lakh rupees, including CGST, SGST, UTGST, and IGST, totaling together less than 2.5 lakh per month. And then refund related, interesting two announcement. Those who are struggling with inverted duty structure, they would be allowed provisional refund. 90% provision is not there. Corresponding provision going to be made in the CGST Act, but they have said there would be 90% provisional refund would be granted, that too within 7 days to those who are under inverted duty structure. Only they have said non-risky taxpayer, even for the zero-rated supply, the refund under zero-rated supply, export of goods or services, or supply of goods or services to SEZ unit or developer. Refund would be made in time-bound manner, technology-driven, and there would be 90% provisional refund within 7 days to non-risky taxpayer. And this will be within the time-bound manner to ensure that working capital is not blocked for the exporter. So this is providing towards refund seamless within the time-bound manner, and thereby the objective was to provide ease of doing business, to provide GST as a simple, stable, and real meaning of good and simple tax. So today we are going to discuss at length number of important recommendations as stated. But before that, I am interested to draw your attention. Sector specific. What are the GST rate announcement? So snapshot is being created. I'm sharing my screen with all of you, and the document which I'm showing it to you would be available in the description box, which you can download and check later. So let me start with This is what it is being stated: historic Diwali gift for the nation. Next generation GST reform towards ease of living and building Atmanirbhar Bharat, self-reliant India. Now, what are the important changes? If you look at from the left-hand side, when you look at saving on daily essentials like hair oil, shampoo, toothpaste, toilet, soap, they are moved from 18% slab to 5%. Butter, ghee, cheese, dairy spreads from 12% to 5%. Pre-packaged namkeens, bhujia mixture from 12% to 5%. Utensils now would be 5%. Feeding bottles, napkins for babies, now 5%. Sewing machine and parts now going to be 5%. When you look at from farmer and agriculture perspective, tractor, tires and parts now moving from 18 to 5%. Tractor per se moving from 12% to 5%. Specified biopesticides, micronutrients moving from 12% to 5%. Drip irrigation system, sprinklers, 5%. Agriculture, horticulture, forestry machine for soil preparation, cultivation, harvesting and threshing, now moving from 12% to 5%. So these are the effective changes when we are talking about snapshot, sector specific. Now coming back to the insurance sector. Individual health insurance policy and life insurance policy, which is presently from 18% slab to nil, going to be exempted. That is what the recommendation. Thermometer from 18% to 5%, medical oxygen from 12% to 5%. So a lot of items they have picked up, and even life-saving drugs, critical drugs have moved either to 5% or nil rate. Coming to automobile, your small car versus big car. Now, petrol and diesel, small car, and petrol means not exceeding 1200 cc and length would be 4000 mm. Diesel would be not exceeding 1500 cc and 4000 mm length. It is moving from 28% to 18%. Interesting for the small car. Three-wheeled vehicle moving from 28% to 18%. Motorcycle 350 cc and below moving to 18% slab. Motor vehicle for transport of goods moving from 28 to 18%. So this is for the automobile sector. Now coming back to education sector, where map, charts, globes moving from 12% to nil. So you should not assume that 12% item are moving to 5%. There are certain changes wherein you will find that rate, the slab of even 12% is moving to 5% for most of the product, but there are specified product moving to nil rate also. Even it is applicable when you look at 18% slab. Pencil, sharpener, crayons, pastel moving to nil rate. Exercise books and notebooks moving to nil rate. Erasers moving to nil rate. Consumer durables, air conditioner from 28 to 18%. Television above 32 inches, including LED, LCD TV moving from 28 to 18%. Monitor and projector, 18%. Dishwashing machine moving from 28 to 18%. And most interestingly, cement, which is presently 28%, now moving to 18%, making housing for all affordable. So these are the snapshot in terms of specific sector which we are discussing. But now we are going to discuss the important recommendation of the 56th GST Council meeting. So let me share my another document with all of you. So this is what the press release, and I'm going to discuss and make it easy for my all viewers that what all is being recommended. And this document definitely is available in the description box, which you can download later. So what is that there is respective recommendation, and government is going to issue frequently asked question also for clarification of doubt. So what are the important changes? in rates, GST rate of goods and services. First change pertaining to the goods. So all changes, what all changes you want to see, you can go HSN-wise rate changes at Annexure 1. So you can pick up your HSN-wise rate change, look at Annexure 1. And if you want to look at sector-specific rate change for goods, then Annexure 2. And these are the annexure coming a little later. So let me go through further. Now, pertaining to GST on pan masala, gutka, cigarette, unmanufactured tobacco, chewing tobacco like jarda. Now, GST is going to be levied on retail sale price instead of transaction value. Now, when you look at the services, is there any change pertaining to services? We are hearing a lot of changes, effective changes when we talk about goods, but there are changes in GST rate for services that is also being provided. They are saying HSN-wise rate change, but this is SEC code rate changes in Annexure 3. And if you want to see service sector specific rate change, you need to go through Annexure 4. And interestingly, for the restaurant, standalone restaurant cannot declare itself a specified premise and consequently cannot avail the option of paying GST at the rate of 18% with ITC. In simple meaning, specified premise means where tariff rate in a hotel is more than 7,500 rupees per day. If you're having restaurant in that hotel, that can be considered as a specified premises and you can opt for 18% GST with ITC, but any standalone restaurant cannot be termed as specified premises and they cannot avail GST rate of 18% with input tax credit. Having said that, there would be changed to align valuation rule for tax rate applicable to lottery tickets, certain amendment to be done in GST valuation rules. Now, recommendation relating to the date of implementation, important. You'd be thinking when these changes are going to be applicable. These changes are going to be applicable from 22nd September 2025. So there would be effective rate change in the rate notification for goods 1/2017 and for services 11/2017 from CGST perspective, and corresponding changes would be there under SGST, UTGST, and IGST rate notification. Now, what they're saying, these changes all are effective from 22nd September for all goods except pan masala, gutka, cigarette, chewing tobacco, product like jarda, unmanufactured tobacco, and BD will be implemented from 22nd September 2025, meaning thereby except these items, all rate changes pertaining to goods going to be applicable from 22nd September. So what happened for these items like pan masala, gutka? They will continue at existing GST and compensation cess where applicable till the time loan and interest payment obligation under compensation cess account are completely discharged. So barring these items, pan masala, gutka, unmanufactured tobacco, BD, existing GST rate with the compensation cess. Otherwise, compensation cess is going away. So for luxury and sin goods, there is special GST rate, which is 40% and no compensation cess, barring these items. So effectively 5%, 18%, and 40% for sin and luxury goods. Now, when this pan masala, gutka, tobacco going to be under 40% slab from a date, and this decision of transition would be taken by none other than Union Finance Minister. Wherever you find inverted duty structure sector, they would be getting 90% provisional refund, and that to non-risky taxpayer. This is what it is being stated. Coming to the facilitation of trade. So process reform and other measure related to GST law and procedures are being prescribed in Annex 5. So there are total 5 annexes. We will discuss how to read this press release. I will go a little slow so that we can understand. Now, GST 80 related announcement. So operationalization of GST 80 appellate tribunal. And they are saying it would be operational for accepting the appeal wherever you got impugned order in appeal passed by first appellate authority, you would be able to file your appeal before GST 80, and that would be operational before end of September 2025, and will commence hearing PH, personal hearing, before GST 80 before end of December this year. So now this is the good announcement. Let's wait and watch how this is effectively going to be made operational. The council also recommended date of 30th June 26 for limitation of filing of backlog appeals. So there will be last date by when appeal for the backlog period can be filed. Principal bench of GST 80, which is at New Delhi, will also serve as National Appellate Authority for advance ruling. So meaning thereby, if there is a contrary judgment by two different state advanced ruling appellate authority, it will go to National Appellate Authority. These measures will significantly strengthen the institutional framework of GST by providing a robust mechanism for dispute resolution, ensuring consistency in advance ruling, and offering greater certainty to the taxpayer. This will further enhance trust, transparency, and ease of doing business under the GST regime. Having said that, now we will start with the important annexes. So Annex 1 contain HSN-wise GST rate changes as applicable on various goods. So how to read it? So if you look at column 2, it is all HSN written. Description is being written in a third column, and rate change from to. So let's say live horses, which is presently at 12%, going to be now 5% effectively from 22nd September 2025. This is how you need to look at. So like UST milk, presently 5%, but now going to be nil, effective from 22nd September. Condensed milk. So there's a difference between UST milk and condensed milk. So condensed milk, presently 12%, moving to 5% slab. That is how you can look at your particular item as applicable, and the change in GST rate as suggested. So Annex 1, HSN wise, GST rate changes as applicable. So this is for the first part, Annex 1. Having said that, sector specific change they have prescribed. So there are lot many line item which I'm not reading, but importantly you must keep to your mind pan masala, presently 28%, but going to be 40% from a date which is going to be decided. Until then it is a 28% plus compensation cess until repayment of loan towards compensation cess plus interest. So that is the reason star is being given. So this is from a date which will come later. Otherwise all changes in GST rate change pertaining to goods services applicable from 22nd September 2025. So I'm just going down further so that we can reach to the next annexure. I'm not reading each of the item. You can always look at your HSN rate and the description of the goods to see what is the change happening to your particular category. So let's move. So there are a certain change in value, but no change in GST rate. Presently, these are under 5% slab, but change in the value. So what are the change in value? Like articles of apparel, clothing, accessories, knitted or crochets for sales value exceeding rupees 2,500 per piece. So only change. So up to 2,500 rupees per piece, it is 5% leviable. So pricing of 1,000, more than 1,000, then exceeding 2,500, all simplified. Up to 2,500 rupees per piece, no change in rate, only valuation change. That is how you can look at these particular table. Again, footwear under chapter 64. Footwear of sell value exceeding rupees 2,500 per pair. So rate would be 18%. Only they have changed the value part. So this is what you need to keep to your mind. IGST of 18% now going to be nil. And this is applicable for these particular specific HSN and the description of goods. So you can look into this part as well. Effectively, I say 22nd September 2025, except pan masala, gutka, unmanufactured tobacco, jada, etc. Now, Annex 2 is the interesting one. It is sector specific. So in case you want to look at GST rate changes pertaining to goods sector specific, your sector, you can look at Annex 2. So food sector related change, it is starting with the food sector and saying that 5% existing slab now moving to the nil rate. So what all HSN like 0401 UST milk, which is presently 5%, but now going to be nil rated. Chena or paneer or pre-packaged and labeled will move to nil rate effective from 22nd September 2025. Pertaining to food sector, 18% slab moving to nil rate, 2106, like any paratha, parotha, any kind of Indian bread by whatever name call, it would be nil rated. That is what specified. So classification dispute, this time GST Council has taken a pain and tried their best to done away, to reduce classification dispute pertaining to GST rate, different GST rate as applicable. If you look at 12% to 5%, then the condensed milk, which is presently 12%, now going to be 5%. That is how you can read Annex 2 sector specific. So this is how it is being explaining. So I'm not reading each of the line item. This document would be available in a description box, which you can cross-check. Under food sector, there are certain items falling under 18% slab will move to 5% slab. Like malt, whether or not roasted. So presently 18% will move to 5%. That is how you will look at. So 18% to 40%, like other non-alcoholic beverages. So your Coke, Pepsi, all non-alcoholic beverages will move from existing slab to 40% slab. And as I said, no more compensation cess. No more, except on pan masala, gutka, unmanufactured tobacco, jarda, that will continue till the date as decided by Honorable Finance Minister. From 28% to 40%, like pan masala, and again this star I've already explained. All aerated water containing added sugar, other sweetening matter or flavored. So all are now going to be 40%, and now no more compensation cess. 40% highest slab. Now, second sector is tobacco. So sector specific, you need to go back to Annex 2. So tobacco from 18% to 5%. 18% to 5%, but this is only for the BD wrapper leaves, tendu, or Indian katha. And when you look at 28% to 18%, it is applicable only on BD. Star means same. It will continue with compensation cess till the date the loan repayment of is being done along with interest. 28% to 40%. This is how the rate change under this sector. Agriculture sector. So again, rate changes 12% to a 5%. And that is how the different HSN, different description is being prescribed under agriculture sector. 18% to 5%. So I'm not reading each of the line item. I'm only explaining the way you can read it. And if you go and continue like this, there are 24 sector-specific changes. 24 sector-specific changes they have provided in Annex 2. How the rate changes are happening. For your convenience, for your ease of business, you can pick up your sector, check the effective change, but must look at your HSN and description so that you can correlate. That is how you need to look at Annex 2. When Annex 2 is over, so I'm not reading, I'm just going for the coal. You must pay attention. Presently 5%, but now going to be 18%. So presently 5% with a compensation cess, right? But now going to be 18% with no compensation cess. That is because there is now no compensation cess. Highest slab 40%, compensation cess gone. That is how you need to look at renewable energy. All solar power equipment going to be now 5%. Textile sector, one of the labor intensive sector where we got inverted duty structure problem. So it is being now taken care of. Lot of raw material items are now being prescribed under 5% slab. So inverted duty structure will not be there. So that is what the government has tried and recommendation of 56th GST Council meeting. So no change in rate, 5% remain, but the change in value, because they have said any articles of apparel not exceeding 2,500 rupees, there would be 5% GST rate. Otherwise 18%. So 18% to 5%. So there are another change from 18% to 5% and tariff specific, HSN specific, 5402, 5404 like that. 12 to 18%. Look at which I was referring just a while ago. So there will not be slab of 12%. There would be next slab. After 5%, there would be next slab of 18%. So any sales value exceeding 2,500 rupees, it is now 18%. Health sector. So a lot of life-saving drugs, cancer drugs are moved to nil rated. So from 5% to nil rated to provide relief for the healthcare sector. 12% to nil rated. A lot of medicine names are being given under chapter heading 30. So this is how for the health sector. Education. So a lot of item which I referred initially in snapshot are now moving from 5% to nil rated, like erasers, 12% to nil rated, map, pencil, sharpener, exercise book, graph books, all nil rated going to be from 22nd September 2025. Common man item, tooth powder, candle, all good safety matches, feeding bottle, moving to 5%. Consumer electronics, I said AC, 18%. This washing machine, 18%. Television, including LCD and LED, exceeding 32 inches, now going to be 18%. Paper sector, moving from 12% to nil, which is for uncoated paper, paperboard used for exercise books. 12% to 5%, they have specified what all item going to be falling. 12% to 18%. So as we have understood normally that 12% slab is going to be 5%, but there are certain items which is moved to 18%, like 4702 chemical wood pulp, moving from 12% to 18%. So you must bear in your mind, sector specific, you must look at what all changes are relatively applicable to you. And I must compliment this document, which is being prepared and provided for easy digest to all the taxpayer, all stakeholders. Transportation sector, 28% to 18%. So they have said what all moving from 28 to 18%. So this is what from a transportation perspective, what all moving from 28 to 40. Again, you need to be careful about and you must cross check. Sports goods and toys from 12% to 5%. Dutiable articles for personal use for import. Sometime you are importing personal use item. Rate is now changed and giving relief to you. It is moving from 28 to 18% IGST. Leather sector, Again, moving from 12% to 5%. So you can look at these items again. Wood sector, 12 to 5%. Defense sector, again 12 to 5%. So what all item? HSN wise, description wise. Footwear, again you can look at from 12% to 5%, where sales value is not exceeding 2,500 rupees per pair. What happened? Exceeding 2,500, maintain at 18%. Miscellaneous item, 12 to 5%. So that is how 12 to 18%. So this category is important. What is our perception that 12% is moving to 5%, but there are few exceptions which is being done from 12% to 18% also. 28 to 40%, and construction sector 12 to 5%. So you can look at 28 to 18%, handicraft sector. So there are almost 28 sector they have picked up, and sector specific they have prescribed rate changes. So you can always look at sector specific. Other proposal like 28% slab and 18% slab move to 5%. Unmanned aircrafts 5%. IGST 18% to nil rate. So nil rate, what all item, tariff HSN wise they are prescribed. So effective date 22nd September 2025, except pan masala, gutka, unmanufactured tobacco and jarda. Now come to Annex 3. And we are here discussing GST rate changes applicable for services. So HSN means SSC code, and they have picked up the services wherein GST rate change they have prescribed. So this is a SSC code, but in Annex 4, they are picking up service sector specific GST rate changes as applicable for services. Like first part, you can read composite supply of works contract service involving predominantly earthwork, that is constituting more than 75% value of the works contract provided to the government. It is existing 12% with ITC. Now it is going to be 18% with ITC. So look at all the changes, 12% to 18% under SSC code of 9954, another SSC code 9963. And this what we were discussing about, that supply of hotel accommodation, which is specific change they are referring apart from restaurant. Supply of hotel accommodation having a value of supply of a unit of accommodation less than or equal to 7,500 rupees per unit per day or equivalent. It is existing 12% with ITC, but now it is stated 5% without ITC. So less than 7,500 per day per unit, existing 12% with ITC, but proposed 5% with no ITC under SSC code 9964. So we are talking about air transportation, supply of air transport of passenger in other than economy class. So premium economy, business class, existingly 12% with ITC, now going to be 18% with ITC. So this is what they are referring to under SSC code 9964. So again, I'm requesting viewers that you can cross-check with your corresponding services, SSC code, whatever GST rate as applicable. Under 9965, supply of transport of goods by GTA. It is 5% without ITC under reverse charge method or forward charge method. Now what they are saying, this rate is same, but when you go to Roman 2, it will make sense to you, because then there is effective change which they are referring to. But here, when I'm talking GTA, please, when I'm talking GTA, it is 12% with ITC, now going to be 18% with ITC, just for the analysis sake, because every line item has got deep analysis. Presently, 5% for the transporter, GTA transporter, under reverse charge or forward charge without ITC. But if you select forward charge with 12%, then ITC available existing, but now going to be 18% with ITC. So this is what the change in the hands of GTA transport operator. So please read each of the line item carefully to determine the GST effective rate changes on services. For SEC code 9966, supply of renting of any motor vehicle with operator designed to carry passengers where cost of fuel is included in consideration. Existing, if you look at, barring the first row, second row, we are 12% with ITC because 5% comes with the restriction ITC only in same line of business. But where the full ITC is available, rate is changing to 18%. Now, this is local delivery services. India is used to take local delivery services, right? So they have made effective changes, even supply of local delivery services through e-commerce operator Blinkit, for the name's sake, for your understanding sake. So a lot of changes. These local delivery services, this service is currently taxed 18% with ITC, and this is covered under SSC 996813 under group of postal and courier services. It is now saying 18% ITC with no change, but here, wherever supply of local delivery services through e-commerce operator, so they are saying it is not currently notified under section 9 subsection 5, means such e-commerce operator are considered as a deemed supplier of service. Now they are saying local delivery services to be notified under section 9 subsection 5 in cases where person supplying such services through e-commerce operator is not liable to registration under GST. Means e-commerce operator need to discharge GST as a deemed supplier of service. And the applicable rate on such services is going to be 18%. Local delivery service provided and by and through e-commerce operator to be excluded from the scope of GTA services. So that is how the local delivery services. So definitely all line items are important. Changes are happening. Now here's, you look at leasing or rental services without operator of goods which will attract now 40% GST. So it is moving 28% with ITC to 40% with ITC. Simple. Leasing of car. If car is 28% GST, then leasing would be 28%, right? That was the scenario. When car is now moving to 40%, the service for leasing would be 40% with ITC. That is how you need to look at the SEC code 9973. So stated. So even job work related services, they have made changes, and it is just to boost, local manufacturing. Where is reduction you are seeing in terms of specific item, chapter specific, you must bear in your mind. So this is how it is coming out. So not reading in detail, that's services proposed to be exempted. Presently taxable, but exempted. So all individual health insurance along with reinsurance thereof, which is presently 18% with ITC, it is now going to be exempted. All individual life insurance along with reinsurance thereof, individual life insurance, please, from 18% to exemption. Exemption means now no ITC. You will not be given any ITC, being your outward is exempted. So please try to understand the price repercussion. So if any insurance company giving life insurance, individual life insurance or health insurance, they will not charge 18%. But at the same time, it is exempted. But there would be lot many inward supply in their hand where they were availing the ITC in the past, right? Input tax credit in the past. But now being exempted, ITC will not be available. So you should not assume that you got benefit of 18% straightforward. The ITC component which was otherwise available will not be available now. So they will include in overall costing and pricing of insurance product, health insurance or life insurance policy to the policy holders. To that extent, we have to look at. But of course, we as a consumer and government intention is, whatever rate reduction is happening, commensurating benefit must be passed on to the consumer. When I'm saying so, let me discuss this component so that you will get more clarity. There is rate reduction, right? From 12% to 5%, 28 to 18%, and even somewhere exempted. Whether industry, trade and industry going to pass on the full benefit we have to look at the expectation. Of course, it is being expected that they will pass on the commensurating benefit to the consumer. But there is no anti-profiteering provision applicable as on date. It has gone from 1st April 2025. So what happened in case they are not passing on? And in yesterday's press conference, this question was asked. And Revenue Secretary has stated when GST was introduced in July 17, they have seen that, initial cases around 700 cases of anti-profiteering, consisting of around 4,362 crore. 4,362 crore anti-profiteering cases were filed, and initial 3-4 years it was 60%, to the tune of 60%. So they are confident of that industry will pass on the commensurating benefit to the consumer, whatever they are being benefited in terms of GST rate reduction. But there is no anti-profiteering provision applicable today. So it is all dependent upon industry player to ensure whatever benefit they are getting in terms of rate reduction, they must pass on to the consumer. Another point which is coming out to my mind for you to note, that let's say some item which is moved from 18% to 5%. Let's assume hypothetically 18 to 5%. And they were having ITC also. And let's say ITC to the tune of 7%. Let's assume. So 18 minus 7. So 11%, let's say they were paying through e-cash ledger. Let's assume like this so that you get a more clarity. But now it's moved to 5%. So to the extent of 1%, still there would be ITC in their hand, right? ITC in their hand. What they will do with this 1% ITC? It is now we have to look at from either from inverted duty structure perspective, but whether the inverted duty structure is coming in their scenario, we have to check. If it is not coming, then what happened? 1% going to be keep on accumulating because existing rate going to be changed to 5%. So what they will do, to my mind, they will build in their costing and pricing. So these are the factors still open, and I will request CBIC and request government to clarify such issues as well. Though they have issued the frequently asked question, but still these are the integrity which will come into the picture. I am also coming to a point where I'm of the concern view that effective changes from 22nd September, right? There will be stock lying with the distributor, dealer, retailer, which they may have purchased at a higher rate, now going to be reduced to lower rate. Maybe 5% or maybe 18%, depending on the slab, move from 12% to 12% or 28%. Let's assume. But they have purchased when it was at a higher rate, 12% or 28%. So that is how we are discussing, right? But now going to be either 5% or 18%. So after 22nd September, they need to apply the new rate, new reduced rate. So what happened to all disclosures MRP lying with the distributor, dealer, retailer in terms of Legal Metrology Act? So these are, because after 22nd September 2025, you can't sell at the old GST rate. You need to sell at the new GST, reduce GST rate. So to that extent, your new MRP will come into the picture. Reduced MRP will come into the picture. So effectively sitting on 4th September, if new rate applicable from 22nd September, you are having a very less time period in your hand to take care of these measures, wherein all inventory in the market, you need to disclose correct pricing with a reduced rate. So these are the factors which is important for the trade, industry, and commerce to get prepared. So I'm highlighting those parameters. So this is the exempted which I discussed pertaining to health insurance and life insurance policy. Now, Annex 4 is a service sector specific changes. So transportation sector, you can check. So I'm not reading line by line. Job work sector, you can check. Construction sector, again, you can check what are all changes happening. Local delivery services through e-commerce operator, interesting change. Now, e-commerce operator would be deemed supplier of service under Section 9, subsection 5, and 18% GST rate applicable. So other services. So this is Annex 4, which we are discussing. Now coming to the all casinos. We got, hue and cry, online gaming, casino, horse race, It is 28% with ITC, now going to be 40% with ITC. So look at what all item now going to be 40% with ITC. We all are very much used to IPL, right? Look at now pricing effect when you go and watch IPL matches. Admission to casinos, race clubs, any place having casinos or race clubs or sporting event like IPL, it is going to be 40% with ITC. So leasing and rental I have already explained and discussed. So betting, casino, gambling, horse racing, lottery, online money gaming defined as goods. Now it is going to be 40% with ITC. So corresponding changes in the lottery valuation rules are also being carried out. Services proposed to be exempted because sector specific, which we have already gone through when we were discussing SSC code wise. Now it is sector specific. So they are saying it is now going to be exempted. Now coming to the facilitation of trade, certain major. So 7-8 items they have prescribed. First, they are talking about sanction of risk-based provisional refund to facilitate refund claim on account of zero-rated supply of goods or services. So wherever you are doing zero-rated supply, they are saying we will have provisional refund 90% within 7 days to non-risky taxpayer. That is what they are specifying and stating here. So, but otherwise with a rider that they will also notify certain category of registered person who may not be granted refund on provisional basis. So you have to wait for that notification and check whether you are not being restricted for the provisional refund. But important is, even today, we are struggling with. We are not getting refund in time-bound manner. So these recommendations must be implemented in letter and spirit. And these changes going to be effective from 1st of November 2025. 1st of November 2025, but rate changes from 22nd September 2025. Even provisional refund to inverted duty structure, 90% within 7 days. Corresponding changes will be made in GST law accordingly, and changes going to be effective from 1st November 25. So there's certain restriction, low value export consignment, that refund was not available, but they are saying we will done away with. We will remove the threshold limit because there are a lot of small exporter exporting through courier postal mode. They will be allowed to refund accordingly. Simplified GST return within 3 working days to small taxpayer whose liability, and they can assess by themselves whose liability for particular tax period will not exceed 2.5 lakh per month, inclusive of all CGST, SGST, and IGST. I've said in the beginning. And as per this benefit, government is saying 96% of new applicants applying for GST registration will get this benefit. Operational from 1st November 2025. Introduction of simplified registration scheme for small suppliers supplying through e-commerce operator. So they are saying that the council has approved in principle concept of simplified GST registration for small supplier making supplies through e-commerce operator across multiple states, facing challenge in maintaining physical place of business in each state as currently required. The challenge was, if you are a small supplier and supplying in different state, do we require to have principal place of business in each of the state? That was the issue. And then multiple registration under same PAN number. So they are saying that we are going to simplify, and that is going to be clarified also. Interesting, intermediary services, which is not export. Lot of dispute under section 13, subsection 8, clause B. Now they are saying we are going to done away with. We are going to omit this provision. It is now going to be default rule under section 13, subsection 2 of IGST Act. So location of supplier being place of supply, and it was not export of services. Lot of dispute we have seen pre-GST and even in GST. Supreme Court has given judgment. They have dismissed the SLP filed by revenue pertaining to this intermediary versus export of services pre-GST era. So to take that cognizance, and now they are saying we are omitting this intermediary provision, and we want to give this help to the exporter. So 9 years of GST and pre-GST from 1st October 2014. Intermediary place of supply was location of supplier. At least a big relief, big relief. Now they are going to make change pertaining to credit note, post supply discount. So there are a lot of confusion that whenever post supply discount given by the supplier to the buyer, how this is to be done, what is the impact of financial credit note, commercial credit note versus credit note under GST. So they are going to recommend and they are going to clarify all this thing. And in this process, they are saying we are going to omit section 15, subsection 3, clause B, Roman 1. Thereby, they are omitting requirement of any agreement entered into before or at the time of such supply, and linking with the invoices. They are going to done away with. So they are saying that we will make effective changes, important changes. Resigned the circular number 212 dated 26 June 2024 to provide more clarity, because in past we have seen the supplier issuing credit note taking adjustment of GST on a credit note with his output tax liability, but there was no mechanism to cross-check, no mechanism to cross-check whether the recipient has reversed corresponding ITC or not. So there was prescription, CMA certificate. Now they're saying we are going to all resign such circular. It is all going to be automated. That is what it is being referred in the recommendation. So they will come out with a detailed clarification in this regard. So pertaining to other law and procedure, now there would be RSP, retail sale price as against transaction value for GST applicable on pan masala, cigarette, gutka, chewing tobacco, jarda, sentenced tobacco, and manufactured tobacco. So they are going to make amendment in CGST rule and notification will be carried out accordingly. Last line, which is important, these recommendations are presented for giving simple information to the stakeholders. Same would be given effect through relevant circular, notification, and law amendment, which alone shall have the force of law. So this press release, it's providing understanding to you so that you can understand what all changes are being recommended. But effective changes, you will check with the notification, corresponding amendment in the law or rules as required or read by circular if clarifications are getting issued. So this is what being a recommendation of 56th GST Council meeting, initially planned for 2 days, 3rd September and 4th September, ended on 3rd September. Press release got issued in the night on 3rd September. Press conference was done on 3rd September. And a lot of things is being stated. And as I said, on premise of Honorable Prime Minister vision, next generation GST reform, this 56th GST Council meeting was the historic one. Because after GST introduced in July 17, rate rationalization was the biggest demand. Now it is being done. So effectively, there would be nil rate, 3% for specified like, gold jewelry, 5%, 12% slab gone, or 18%, and 28% slab is also gone, moved to 18%. 28% will remain only for pan masala, gutka, jarda, unmanufactured tobacco, with cess to a time, to a date when Union Finance Minister will decide, and it is subject to repayment of loan along with interest. Otherwise, all GST rate changes, 5, 18, and 40%, which is for luxury and sin goods, going to be applicable from 22nd September 2025. Service-related changes in terms of process and other stuff is applicable mostly from 1st November 25. And I've said structural reform, IDS, inverted duty structure, government has tried their best that they are simplifying IDS. They are trying to reduce the IDS instances where you see the raw material procured at a higher rate, but output at a lower rate. IDS comes in. So they are also making sure if IDS exists, refund, provisional refund, 90% would be given within 7 days. So this is interesting. Zero rated refund, provisional refund to non-risky taxpayer, 90% within 7 days. Registration within 3 working days to small taxpayer, like whose monthly liability is less than 2.5 lakh rupees, inclusive of CGST, SGST, UTGST, and IGST. Lot many changes within 1 hour. I tried my best to run through this press release. Next video I'm going to capture, and which is interesting one, a separate video. I know that changes effective from 22nd September 2025, but there may be many situations. Like first important situation, let's say you have supplied the goods or services prior to 22nd September 2025. Invoice is issued after 22nd September 2025, or with the payment received prior to 22nd September or post 22nd September. 22 September 2025, important, right, for changes. But these combination going to play important role, right? Let's say invoice raised, but supply is made after 22nd September. What happened? Payment received, but supply and invoice all raised after 22nd September. Many situation, right? So next video I will capture on this. Next important, actionable item for industry to get prepared. Your stock lying with the distributor, dealer, and retailer. If rate reduction happening to your product, you have to change your MRP accordingly. Pass on the commensurating benefit to the consumer. What is the commensurating benefit? You need to look at from your ITC perspective also, which I've explained. So if you want to understand quickly, again, I'm recapping. Let's say 100 rupees is the output. Let's say it was initially 12% applicable. Let's assume hypothetically 12% applicable, and you were having ITC to the tune of 6%. So balance 6% you were paying through e-cash ledger. But now it's moved to 5%. 5%. So what happened? If it is moved to 5% on your output, but ITC related inward is not changed, then your ITC remain at 6%. So 1% would be accumulation part. So we have to see if there is no change on inward supply input, which we are referring to, then IDS will come into the picture. If it is not a case of IDS, then what happened? This 1%, which is excessively getting accumulated with you. Though there's a change from 12% to 5%, but this 1% which keep continuing. So what is the commensurating benefit we are referring to? So I'm saying that you need to go back and check, do this all working and calculation, keep everything ready, intimate to the authority also beforehand, that this is what my mathematics, please see. And this is how we are going to do, and commensurating benefit in terms of rate reduction we are passing on is this much. So let's create the documentation so that tomorrow, if any litigation comes up, it is not falling back on your head. Of course, when you look at anti-profiteering, no provision applicable today. Government is expecting trade, industry, and commerce to take cognizance by themselves and really giving respect to the trade, industry, and commerce, that they will pass on the commensurating benefit in terms of rate reduction to the consumer. Ultimately, consumer must be benefited, because if pricing is going down, quite obvious, my consumption will go up, my demand will go up, and it is going to add to my overall GDP. On revenue implication, revenue loss, interesting question was discussed in during the press conference. It is being stated there is nothing like revenue loss. We have just taken a data of 23-24 and comparing data of 23-24, we are analyzing. It's a dynamic number. It is being stated dynamic number. You can't judge there is loss because of rate reduction, because there would be certain factor need to be kept in a mind. Buoyancy means when rate is being reduced, quite obvious, you will see increase in your consumption pattern, increase in your demand pattern. So corresponding change will come. It's a dynamic number, right? Dynamic number. Though stated to be revenue implication as stated by Revenue Secretary going to be 48,000 crore rupees because of this rate reduction. But he said it is only some, ballpark figure, but it is dynamic number. Your compliance will increase because of rate reduction. Informal economy will come to the formal economy, organized. And the consumer behavior going to change, because then they will start. Today even consumer is saying, no, you don't raise bill with GST, I will pay in cash. But tomorrow when rate is reduced, of course consumer behavior will change, and he will say, no, you raise the invoice, I will pay you 5%. And we must do that. We have to move from informal to formal economy, unorganized to organized economy. That is what it is being expected from all of us together. And then it is going to add to our overall GDP. So whatever, another question which was asked pertaining to tariff threat, which is being imposed by US, is it really in this context, this rate rationalization is being done? Honorable Finance Minister has said, no, we were discussing rate rationalization for a long time. So overall, if you look at, I've tried my best to cover up what all important pointers from our preparation perspective. And another video for 2-3 subject matter which I'm finding important, definitely I will record today and would be posted within a day or two. So you may be on my YouTube channel. You can subscribe so that whenever I'm posting such videos, you can see the notification and watch those videos. So thanking each one of you. सबसे बड़ी बात, this is the initiative, next generation reform to help common man. GST rate reduction important. So let's see, it is creating Atmanirbhar Bharat, stimulus to Atmanirbhar Bharat, and we must contribute and come forward to ensure it is benefiting to all of us together, to all Bharat. Thank you very much. Thanks for watching. Thank you.